Welcome back, guys, Crypto4Life channel. Today we'd like to talk about how to work with the range, flat, sideways consolidation. You can call it whatever you want. Let's dive in. So guys, all of this terminology, it's absolutely the same things. It's just sideways. So technically, we know the chart, the price always move to the right side, right? Believe it or not, but 70% of the time on the market, we trade just in a flat. And guys, it can be the kind of a long video, but I'll try to explain you everything in details. So we'll not come back to the range term in the next videos. I'm making notes here. So the range, flat, sideways consolidation, it's absolutely the same things. Different things, it's compression, because compression can be like a downtrend compression and the uptrend compression. So it's not a compression, it's not always the flat. Next moment, you have to pay attention for the time frames. Yes, everything what we see on the charts, it's just basic fractals, basic patterns, and what happens on a weekly time frame, absolutely, almost, it can repeat itself on a 1 hour time frame, for example. That's why you have to work with that time frames and work with that range. What do you trade? Because, for example, on a weekly time frame, it can be the downtrend, but on 4 hour time frame, it can be the range, and you can work with that range and get a stop losses or liquidation because you think on this time frame we should go higher, for example, but on a weekly time frame we are going straight to the bottom, right? Again, next one, like I told you, price moves sideways 70% of the time, while only 30% of the time it follows a strong trend. It can be the downtrend or uptrend, and we can work with the range for swing trades. And yes, many people hate the ranges because everybody want to see only the up only trend or down only trend, so you can open short. But technically, guys, the range is a really good time period on the market because we can open the more positions. You have to understand it. We trade in some flat, and we know the range, where the top, where the bottom, and where the equilibrium, for example. And we can open as much as possible trades, for speculation to generate the profit. It's pretty good one because a trend can shift in a moment. You have to understand about the time frames. I already explained it to you. This is example on the link, why we trade long-term period, for example, on the weekly time frame, on the link and the sideways, because the whales, if we talk about a spot position, depends of seasonality, depends of market cycle. The whales use, based on my experience, I can confirm it. The whales use the weekly time frame, sometimes even a monthly, for accumulation. So yes, it's a long, boring chop consolidation period. Really boring, right? And exactly this time, the whales accumulate their spot back. Next time, we can use the money power indicator when we see the money outflow, when we can track, for example, on the weekly time frame, the take profit indicator to identify when the whales step by step distribute their bags. So it's really useful time periods accumulate together with the whales, because I explained to you they can't basically at the bottom press buy market with a billions USD dollar position, because it will be the crazy spike like this one. And of course, they will not accumulate as much as possible link, because the entry will be not in average. The entry, if they press buy, the order will be filled not at $7, for example, for link. There's going to be this huge spike, and average entry could be like 20. That's why they buy, sell on a weekly time frame, on a daily time frame, to accumulate as much as possible coins. So that's the point of the range. Of course, we can see this 2 weeks. Sometimes the market makers, the big players, can press sell by market and the sell large position. But of course, I understand they will adjust that decision to some news, to some market period, for example, to some thought around seasonality. It can be the, for example, sell and may go away, even like it happened here in 2021. So of course it was a trend. So they sell it here, sell it here, sell it here, drop. Last position by market, yes, they can dump in 2 weeks. But when they need accumulate position, right, they accumulate longer. Take a look about the time periods. This, for example, we got a like trend. This is a, let's say, uptrend move from the last correction. This one, 77 days, right? Next move, we got from this drop to the last point before reversal move, 70 days. From this point to the, let's say, to the top here, 112 days. From this top to this bottom, we got 105 days. So you understand the trend. Uptrend, drop. Uptrend, drop. Uptrend, drop. And the same way it's a downtrend. But the 70% of the time we spend in consolidation, 525 days. You know, the trends, it can be local one, drop, local one, drop. After that, we get like consolidation. Global 525 days, it's a time where the whales accumulate. Of course, also we got like range, we got a local range, and on this example, on a daily time frame, I will show you the how to trade this range, for example. So you can see, right, accumulation, impulse, some distribution, impulse, downtrend. Again, accumulation. And we build a structure, start build a structure. So in this case, this is a break of structure. About a break of structure, definitely I will make another video. So this is a accumulation, this is a break of structure, impulse, breaking out of structure, downtrend, local one, drop it down, and now we form the higher lows. Still lower highs, right? But we break a structure, and now we got the new direction based on seasonality. We have to build the momentum and the structure uptrend. Next moment, how to identify whether the price is in the range or in the trend. First one, in the bullish trend, the price does not break its previous low. So I'll recommend you go and check the video about structure. In the bearish trend, the price does not break the previous high. When we trade in range, the price alternates between the breaking highs and the lows or vice versa. So this pattern helps traders recognize sideways movement. So in this area, there is basically inside a weekly time frame, of course, on a small time frame, there is some structure, local one. But globally, this is a structure, last impulse down, and we trade. Only, for example, the impulse started in April 2022, and only in February 2024, we break of this structure. You know, that's why everything what we trade here, it was just a range. Nothing special. And weekly time frame, of course, guys, like I told you before, I personally also use for accumulation spot position. And yes, it can be even 500 days, 1,000 days, right? Some tokens accumulate, some tokens, the whales accumulate faster, some slower. So it depends of the liquidity, right? And the main purpose. Next moment, it's how does the range form? So the range forms when the price after the trending move. So for example, this is a trending move, correct? This is just a pure trend. Fails to establish a new high or low. So this was a high, this is a low, independent of the trend. It does not break the break of structure. This is a break of structure. This failure signals the start of the range. Any subsequent price movement beyond the range is followed by return and deviation until the full breakouts occur. So this is a breaking out, drop it down below, and this another one, lower high. Next one, it's the purpose of the range. A range serves as an accumulation or distribution zones for large or well-informed players who want to build a position in specific direction or distribute their position. You know, we saw an example in spring 2024, you know, when the whales distribute long-term periods BTC. So price hit new all-time high, then distribution, and distribution and reaccumulation in the same time, and the new all-time high. The same story now we trade in range between the 100K, 110 and let's say 79K. So yes, it's just a wider range. The range boundaries are key tools for the market manipulation, as many traders use them as support and resistance levels, placing stop orders or penny orders around obvious high and the lows. I will show you on daily time frame. So how to identify the relevant range? Range forms after the impulse move or a prolonged trend, regardless of direction. So this was a trend movement, pure trend, impulse. The first high or low after the impulse determines the upper or lower boundary of the future consolidation. So this is a main key point. So let's mark it, this one. So we drop, right? Impulse, drop. We identify the K point, a lower K point. After the downtrend, the first low followed by a high is crucial. Next one, we form at the high. So we bounce. So you can find out now. This is just a pure range. So let's mark it like this one. Nice one. After downtrend, the first low followed by a high is crucial. After uptrend, the first high followed by a low defines the range. The deviation and the range validity. A range is considered valid when the price reacts to the 0.5 level by FIB and respect its upper and the lower boundaries. So about deviations, many times explained you how it works, and I want to show you on this example on the daily time frame what is deviation mean. We go to the daily time frame. So for example, we can identify, we got an impulse and we found the top. Technically in the moment we can't know this is the last top or not. So after that top we form another one, right? So anyway, how to identify it in a moment. In a moment when we trade here, we can use the FIB. I use the FIB, and I would like to show you guys how we can work in a complex with a FIB and 27 zone. Link, I can say, really technical coin, because almost till penny react to some FIB levels. So this is what I can identify. Take a look. We got like impulse, top. We use the FIB from this top to the bottom, this one. So technically, let's use like this one. So here, in a moment, we identified range. After the impulse, we build the last point, build a support point. The main mistakes of the traders, they use so huge, so big leverages, right? That's why this deviation, it's a stop loss hunt. It's around like, yes, 4% stop loss over this high. And definitely the people who open short here, they hide their stop losses, right? Around here. And imagine with the 10x, even at 10x leverage, it's 40% stop loss. So it's kind of big one, right? But we can use that deviation for our trades. So take a look. Top, support, bounce, deviation. Deviation, it's and that time we can mark with the arc. So deviation we mark in the range like this one. This is a deviation at the top of the range. The valid of range, it's a reaction at equilibrium. Equilibrium, it's a 0.5 level by FIB. And take a look, 27 zone. Now, or not now, that point, it looks unreal. How we can drop, for example, from 17 to 11. Why we have to drop? But on the link, like a great example, 27 zone, you can use like an additional tool also. So we got like reaction, respect the level by body candle close, respect the level 23 level by FIB. Here's a 1, 2, 3 reaction, rejection at 0.5. So we can identify the 0.5 level by FIB. Equilibrium of this range is legit. What we can see next? Next, we can open a long position So here's we could open, we could not open position here because at the moment we can't know are we going higher or not. So when we stop it here, at this point, we not also open position because we can't know are we going lower or stop it here. But at this deviation, it could be logically to open short position. Of course, it depends on your risk. You can open position aggressively the deviation, but you can't know where exactly this deviation will stop. That's why I recommend you to use a smaller leverage, right? Or a smaller size of position, or open position, you know, after the drop. So when we already form deviation on the daily time frame, but of course we can open position on the 4-hour time frame, on a 1 hour time frame, and for example, open here. So the target in the range will be the deviation at the bottom of this range. Deviation at the bottom for us is around here. Take a look how the price reacts in respect. First of all, you can fix some profit, 10% in this example at equilibrium. Put your position at the break even, for example, and leave some percentage to the deviation at the bottom, because this low will be like a magnet for us. What we can see next? Deviation, another one. If we form another deviation, it can happen, right? It's okay. And in this case, we can open another short position. And this is example why we have to fix the profit at equilibrium. So take a look, another deviation example. And we move to the, let's say this one, stop 5% to the deviation at the bottom. Once again, take a look how the price respects the level of equilibrium. This is one more confirmation, so we work in valid range. You can try to catch some bounces on long position every single time when we touch equilibrium, like this one. Yes, it's okay. That's the point, guys. What I told you at the beginning of the video. In the range, we get like 3 points, 3K levels, what we can trade. It's a deviation at the top, deviation at the bottom, like entries and equilibrium, short or long. So what next? Bam. Take a look. So yes, we form it, deviation at the bottom, but we always keep in mind the 27th level. Take a look at the spike. Of course, we have to work in a complex, adjust the news, track what's going on in the macro, you know, everything around. Of course, maybe it was some news at the beginning of January. I can't remember. But take a look how the accurate link work with the 27 zone. Of course, if you add the limit order here, probably you get a liquidation even if you add the 5% stop loss. That's why, guys, I'm not recommend you to trade with the limit orders. You have to wait some confirmation. Or you could add the limit orders at 27 block. And technically, we form a deviation at the bottom. So the range is valid. If we move in uptrend, most likely when we form here, impulse, deviation at the top, deviation at the top again, for example, deviation at the bottom, the next one will be the continuation of the trend. After the deviation at the bottom, the priority will be long, continuation of the trend. So that's also keep in mind. If we form at the top, for example, the BTC at 110K, and we form deviation at the top, deviation at the bottom, the priority can be now deviation another one at the bottom, because we're in distribution zone, not in accumulation. So yes, sometimes it's kind of complicated, right? Because if we trade in range, everything depends of the market stages where we now. Of course, if we just bounce it from the long 500 days accumulation and we start build the uptrend structure, the priority in a range will be the uptrend, not a downtrend. So that's the point. Take a look what happened next. Once again, guys, take a look. We respect the 0.5, respect 23. So that's the point how we can work with the FIPS. And FIP works if we identify the levels correct, you can work with the correct levels and open trade as much as possible local one. Let's say 4 hour time frame. Imagine how many trades you can open here. Take a look how accurate that link. Not all coins trade like link, of course not. But take a look here, 0.5, stop like 3%, bam. You can fix it the next level, so 7% profit. Open short, stop loss at over the first level, drop here. Support at 23, rejection at 0.5, drop to 23, so you can open as much as possible trades. This is what the whales doing in the range. Next step will be probably the test of the 0 level. Bam, 0 level. Also guys, small tips, when you see some huge spike like this one, in many cases, we come back and close the 50% of this week. The same deviation, the same respect of the level 38 level by FIB, and we move on. Take a look. Once again, hold the line at 0.5, 23. Hold the line by body candle at 0.5. Reject at 78. Take a look. So it's not random. Take a look how the price respect the level 0.5, 86. We stop it exactly till penny. But guys, I identified it works perfectly well on link. It works even on some low cap coins, but sometimes there is a bigger spread between the ranges. Once again, 0.5, and the priority, it's a long. The priority is a long, and the targets is 19 and 22. So what we could see next? And where we stop? Here, a 1.61 level by FIB. And this line, it's a break of structure what we marked before. So, you know, sometimes it's complicated, right? But it works. Everything what we see on the chart, it's algorithm. And our main goal is identify the correct levels. Take a look how the price respect 2.61. The most difficult part is identify correctly the first starting points. A range, it can be the really useful time period on the market to open swing position or some, I don't know, local trades. I recommend you go and check the main video about a link, you know, when I posted here. Take a look how the price respect the level. 18, level by FIB, 38, drop. In this case, if we'll drop again, it can be a return to the range. If the market will build the uptrend, depends of the seasonality, depends of the market cycle, we build a uptrend structure. And it's not a range. It can be the range, just global one. You know, on the monthly thing. Everything should be in complex. That's why, guys, it was a main key point about a range. There is no magic, nothing, but you have to do a lot of back tests for your specific coins, what you trade on your specific time frame. And you will see the behavior, how it works on the range. With the practice, you will more accurate will identify the ranges, so you can more accurately open the position for swing trades or for local scalp. So guys, I hope you like this video. Subscribe channel, hit the like button, hit the notification button. Don't forget to join my Telegram channel. See you next time, guys.